Has Denver's housing become a luxury good? I mean, that's a question a lot of people are asking. And if you grew up in Colorado, you've watched the massive growth in population and traffic, wealth, and home prices, leaving you wondering if you can still afford where you call home. And while no one likes the high interest rates we've all been experiencing, the hope might have been that they would have forced home prices to come down slightly, offsetting rising monthly mortgage payments and allowing more buyers access to home ownership. Yet, after we saw a brief 4.7% drop in Denver's home price index from June 2022 to March 2023, home prices have bounced back, recovering all but 2.5% of that peak at year-end 2023. Today, based on DMAR's March Market Trends report, Denver's year-to-date median home now costs 4% more than it did a year ago at this same time, even given the last year and the increase in interest rates. Now, adding a little bit of insult to injury, the Common Sense Institute just put out a report showing that Colorado ranks 51st in its home buyer misery index, putting it dead last relative to the 49 other states and the District of Columbia. They note that declining affordability increased the number of hours a home buyer in Colorado had to work, given an average wage, by an astounding 172% in the last 10 years. In 2013, 42 hours of work would cover the monthly mortgage payment of a newly purchased average price home. In 2023, that number had now risen to a painful 114 working hours to cover an average home. That's almost 3 weeks of wages. The index also noted that Denver's housing unit deficit in 2023 ranged between 45 and 115,000 more units needed in order to meet its growing population-driven housing demand. Despite a strong start in 2023, new housing permits in the Denver metro area dropped significantly after May and are still only permitting at a rate of 64% of the shortage. Now, 2 weeks after the Common Sense Institute report, the U.S. News and World Report published one I liked a lot better. It published its hottest U.S. housing market report, crowning Denver Metro as the hottest and most robust real estate market in the United States, based on its index and measure of demand, supply, and financial health. The supporting statistics that they used should be familiar, as they're ones that I've shared, highlighting just how strong our local real estate market really is. A few of them include Colorado's strong homeownership rate of 67.4%, with the lowest delinquency rate of only 2%. That's compared to the national 65.7% homeownership rate, with a 3.6% delinquency rate. Going even deeper, Denver's foreclosure rate is a mere 0.1%, compared to 0.4% nationwide. More Denverites are also working, as our unemployment rate sits at 3.3% compared to 3.7% nationally. This strong housing and job market, as well as Denver's low 4.6% rental vacancy rate, will continue to attract investors as well as home buyers into our market. Strong demand on limited supply typically offsets rules of affordability by continuing to push up home prices despite the higher mortgage interest rates we've had. In fact, Denver Metro saw a strong 2% increase month over month in February on our median price point home, and a 3.3% increase on an average price home, putting our home prices 49% higher than the national average. But let's just talk about supply and demand for a minute, because this is what's interesting. Demand isn't actually strong. In fact, mortgage purchase applications dropped 17% during the month of February. And while closed units increased 31% from January, they're still down 0.45% from last year and down 30% from pre-pandemic. Pending home sales are also comparatively lower than pre-pandemic. Then there's the inventory quotient. At 5,511 active listings at February's month end, we have 46% more inventory than we did in 2023, 350% more inventory than 2022, and still 14% more inventory than 2020, right before the pandemic started. So that's not limited in my book. So what you're saying is that with lower demand and more supply, home prices defy economic principles and continue to rise. Welcome to the Denver market. Smart Asset lists Denver's vibrant 41% millennial dense market as the fifth most sought after destination. Many of those moving here earning over $200,000 a year and in line to gain their portion of the impending $72 trillion in wealth transfer. All of this to say, if you choose Denver as your home, now is the best time to buy. I mean, honestly, if we talked about it 3 years ago, was a pretty good time to buy. And 2012 was even more brilliant. But if you didn't buy then, now is your window. And we have to own that while rates are high. And here's why. Denver defies all odds. Nationally, the U.S. is starved for inventory, yet Denver is back to pre-pandemic levels. And our home prices continue to demonstrate the impact of even low demand. As a prospective buyer, I'm looking at a 98.9% close to list, 2 months of inventory, and 47 average days on the market as opportunity. There are still incredible choices and deals. They just might not look exactly like what you're looking for. Be open to thinking outside the box. Consider a home that needs work or is just outside your circle. Explore negotiation opportunities of rate buydowns. Or if over 62, consider how much more you can buy with a reverse mortgage for purchase. While this market might feel limited, a little strategy and creativity can go a long way. Plus, what this market demonstrates more than anything is Denver's resilient housing market is an incredibly strong and financially sound investment opportunity. Well, that's a wrap for this month. Until next time, this is Nicole Ruth with the Ruth Team. It's my pleasure to keep you updated.